Hi, my name is Felix Frey.
And I'm Marco ARKK.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco ARKK are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. My man.
Hey, what a tape.
How are you? What a tape is right. Are we having fun yet?
Yeah.
Yeah,
just started.
Fun, right? This so what's the big things today? You know, there's a lot going on today. I have a lot to say what's going on today. I want to switch it. You know, we're always we've been talking very negative and talking, saying, just telling people to be very careful and not only in these smaller names, but just overall. And yesterday with the economy and a whole bunch of things, I want to leave it off. Yesterday's discussion, I want to leave it off with something positive, right? Something. What's the end goal? How do we get out? Because if I'm looking, call it about the chessboard, and you got to believe that this is all they're doing is trying to figure out the 5-year, 20-year plans. How do we get out of this mess? And I think first to point out that I saw, I'm going to show you this headline. It's on CNBC today. I just picked it up. Stanley Druckenmiller has his own fund, but was George Soros, his right-hand guy, says the Fed is endangering the dollar's global reserve status. Okay, so if you don't believe what I'm saying, then here's a guy who's, a very large investor. And I think it's a good, quick read, but it's what we've been talking about. It's the end game, right? That's what people are scared about, the end game, and everything else is just maneuvering either to some end game. That's one of the possibilities that we don't want. So that's an article that's a good, quick. It's a very quick read, and it's just good. It's a Stanley Druckenmiller. The other thing that we talked about yesterday was sort of, the unemployment and whatnot. And I thought Biden's response yesterday afternoon was awesome. It was a great, right now, to get your unemployment check, you basically, the rules are you have to go out and actually interview. Yep. And you have to interview and say, I'm out looking for a job, and report back to the government. I guess you fill out a form, you tell them where you went, who you spoke to, and they give you the check. And what's happening is that people are saying they're going to these interviews because you have to in order to get the check. But I was talking to actually Rudy this weekend, and he was basically saying how he's trying to hire people, and how people come up and they say, if they're going to spend, let's say, just say $20 an hour, and they'll say, no, I want 40. And if you say, well, we can't pay 40 an hour, and they say, okay, well, thank you. And then they go back and they tell the government, I interviewed, they didn't want to hire me, right? And it's record that you were there. So Biden essentially says, that's got to stop. If someone offers you a job, and it's not like you could start being choosy and say, no, I don't want a job. I just want to sit at home and collect my money. So he's doing, I like that. He's doing the right thing. He's basically trying to stop this, what I call an arbitrage, and just sitting at home and actually going doing something else and making cash money, however you want to make cash money, and still get paid by the U.S. government. So I like that. That's a good step in the right direction. The idea has always been, so the positive, the negative, we understand it's not good. Okay. And we're losing a major battle, around versus our main competitor, China.
Right.
The end game where it's positive is, we only win if the middle class wins. That's it. The United States wins if the middle class wins. And what's happening is we have this, what they call the K recovery, where the rich are getting richer, the poor can't even put food on the table, and prices are going up because there's pressure and buying. A lot of it coming, like we talked about, from China, and everything is, the middle class is getting completely squeezed, and that's never going to be a recipe for success in the long term. Okay, because otherwise, everyone is going to be dependent on the U.S. government, on dollars being given to us, and that story I don't believe ends well. I don't believe it. It might feel well for the time being, and everybody gets money, and we're all good. But at the end of the day, you basically steal from future generations. That someone has to ultimately pay for that, and then you got to hope that the U.S. dollar currency, okay, doesn't go away, because that's how we're borrowing money to do everything else that we do.
Right.
Okay. If you start thinking about the United States as a company, if you had a company, would you do this? I think you start, and when I say a company, and you're doing all these transactions and you need to borrow money, and you're borrowing money for all these other companies around the world, other countries, as long as they keep lending you money, it's totally fine and you can keep doing it. But at some point they say, you know what, Felix, you're running a bad company and I don't actually need to do business with you anymore. That's the game over. That's the US. That's what we're talking about, US dollar status. So, the middle class has to succeed. How do we get there? Well, it starts with policy. It starts with building. We went from, most people don't know this, and I pulled it up. Most people don't realize this, but during Bill Clinton's time, it's actually pretty incredible. This is June 22nd. Here he is. Here's the guy, the man, the myth, the legend. June 22nd, 2018. Okay, the president of the United States comes out and says, well ahead of most ambitious schedule, America has balanced the budget. America can now turn off the deficit clock, long a sign of our leaders' failure of will, and plug in the surplus clock, a symbol all Americans can look to with pride. That was 20 years. That was 1998. At that point, we had $150 billion surplus, right? It's 20 years later. The reported national debt stands more at 21 trillion. Now I think it's 28 trillion or something like that. It's ridiculous. It's crazy. We went from 150 billion. So, part of the solution is to get this deficit down. Deficit means interest payments. Ultimately, we're paying ourselves interest, but somebody's got to pay for that ultimately. Okay. And we have to go in the right direction. What's happened since 1998? I wanted to show people this too. The other thing that happened, so you start seeing comparisons and, the game plan, right? In 1998, at the end of 1998, we were at, where were we? Right around 2000. Okay, call it 2000. 1990. The bull market was in full speed ahead, and we started. Bill Clinton came into office in 1992. Okay, 1992. I think it's January of 93. It was about 800. So you're talking about the market went up 2.5 times. Now, part of a good economy is also a good market. Good markets help people make money on their investments, on their sides, on their savings. Sorry, it's good for pension funds who are paying out for teachers and cops, and so you have this overall general market that needs to go up. Part of the game plan, part of what you're seeing now, the market, like we said yesterday, the government needs the market to be up. The government can't let the market crash here. Down 5-10% is not a crash. We're talking about the COVID situation. That was a disaster. They took it up. They can't let it crash because that's that one piece of the puzzle, just like in 1992, 98, that, we need the market. The difference is that we have lost so many millions and millions of manufacturing jobs since 1998. We've become more of a service economy. Technology has beaten us to a pulp. Right. So how do we get everyone, the middle class, which has been destroyed in those last 20 years? It's no coincidence that the middle class has been destroyed. Debt's gone through the roof. And I think part of the changes need to happen in policy, in corporate policy. Right. Buybacks. The biggest buyer of the stock market has been the companies over the course of the last 20 years. They've bought their company stocks, and it's called financial engineering. And it's really enriched the top corporate CEOs in the country over the last 20 years. You could see their pay salaries, it's gone up. The middle class has been decimated. So how do we win? It's got to start with good policy. I don't mind spending $6 trillion if we're doing it the right way, if we're actually getting people to work, if we're building something, if we're building a manufacturing plant. Fine, let there be robots, but teach people how to man the robots, how to work with the robots, if you will. There's got to be something that we can do. The solution's got to be in something where we can actually have long-lasting careers again. Otherwise, nobody's going to go to school anymore. There's no jobs enough that you're going to stick around for 10 years. Why put yourself in $250,000 in debt to go to an Ivy League school if even as an Ivy Leaguer, you might be out of a job in 5 to 10 years, and then you're stuck trying to figure out something else. So this is the solution lies in the middle class. Okay. Now, what they're doing and the way they're doing it now by granting money, and I don't think that's the answer. That's why I'm saying to you, if I think they know what the answer is, I think they understand that the middle class has to succeed, but how they're going about it, I think it's worrying, because if that's the solution they have found, to basically give people a lot of money and create, throw trillions of dollars at these jobs, I still wonder, you're going to have very specific jobs in very specific states. Logistically, how do you get the person who can't eat in California, who can't eat in Philadelphia, who can't eat in, New York or wherever around the country? How do you get them all to meet in these job areas where there's going to be needed in the middle of Idaho, where we're going to have all these different? I still can't wrap my head at how that's going to work. So again, it starts with federal policy, and then it starts with it even goes to education. It goes, we have to change a lot so that the next 20 years we're building now. And if we're going to spend $6 trillion, the last thing we want to do is spend $6 trillion and don't get anything from it. Right. Mm-hmm. We don't want to see wind factories that don't work in 7 years, or there's a new, that would be a complete disaster. So I don't want to be, this person that's, negative. I'm not. I'm generally a bullish person on America. But I'm an odds maker too, and when I see something that is, it seems like it would be an easy fix, but they don't want to do something. It's because why? Because that's the hard decision. And yes, the market will go down, but maybe they need the market up. We're cornered. That's why I keep saying we need the market up, because if the market's down, things really fall apart on the structural side with pension plans and state debt and whatnot. So all of this is in play here and on the table. It's not an easy answer. Being the president of the United States right now is not an easy job. But, at the end of the day, the focus has got to be on strengthening the middle class, because 1,000 people now have billions and billions and billions of dollars. It's not going to help the 340 million people or the 300 million that are now lower middle class, and 300 million, and then the 25-30 million that are in poverty. That's not ever going to help. But, the 10,000, whatever, the 1,000 people that have the billions, they literally fly in a helicopter, they go to New Zealand, and then that's that. They got Bitcoin in their pocket, and now what? Now we're all looking around going, what was that about? Like, what happened there? So, that's what concerns me. That said, let's take a look at today, because, we talk about Tesla and we talk about ARK. So we start with Tesla, and it's awesome that, we've been talking about the exact news report that sort of sent Tesla into a little bit of a tailspin this morning, which was Tesla puts the brake on Shanghai land buy as U.S.-China tensions weigh. It's a 1 minute Reuters article, 1 minute, 45 seconds. I'm not trying to pound the table on a Tesla short. It's not what I'm trying to do. I'm a realist. I'm an odds maker, and I'm trying to look at this and say, if this is true, and who knows if it's true or not, right? Who knows if this is, maybe it's a short person that has delivered this to Reuters. Nobody's commenting. Tesla's saying everything's fine. But, again, I didn't realize this, but Tesla was the only car manufacturer that the Chinese allowed to come in without a partnership. So it was like saying, sure, come on in, build whatever you want. Make sure you leave the door open at 2 o'clock in the morning so our guys can go in and steal the papers. That's how I feel. That's what it sounds like to me. It's like, we want your secrets. You're the best car buyer in the world. And I think that best new car EV manufacturer world. And we want your secrets. We want to know exactly how to do it. So I think China's pushing back. Again, it's, the media we see, maybe the media is bought to show us what the shorts want to see it. I don't know. But at the end of the day, that article that has put some pressure on the stock today. It also put pressure on ARK this morning. But I want to say that in pre-market, ARK was trading closer to 97, 98, and you saw something happen in the morning. So we're going to look at the charts, and we're going to look at a lot of different names, and I'm going to show you very specifically, because we've been talking about it. I've been saying to you how the hedge funds are putting pressure. They put pressure. They will pound you into submission until you say, you know what? I'm not going to take it anymore, and I'm buying a lot of stock right here. That's what they do. It's a fight. What we're looking at each day is a fight between sellers and buyers, okay? And today may be that one day that we'll look back in a few months and say, remember that day? That's when the buyers stood up and said, you know what? I've had enough. I'm going to start buying right here. It might be 3 days, 2 days of coming back, or maybe it's 3 months. But I think today what we saw is something very different than what we have seen in the past. So let's take a look at ARK today and how that was just how that's traded.
Cool.
I want to make sure that we look at Actually, you know what? We'll look at ARKK in a second. Let's look at Tesla first, because I want to talk about what we're seeing in Tesla. Tesla is not out of the woods yet. I don't think any of these stocks are. One day doesn't make a trend, but you have Tesla here. What I'm looking at with Tesla is very simple. We've been looking at this this move back here. Let's tighten it up, and then basically, we said it would be something like, I'm gonna drop it down to what it is, basically, because I can't go off the page. 775 to here. This from top to bottom is the same top to bottom from here to here. Okay, so I'm looking at that. I'm also looking at the 50-day trending down, the 200-day trending up here, and 600. Now, the reason I wanted to start with Tesla is because Tesla obviously is the lead horse that we've been talking about for a while. It traded well. So I have this. Let me go over here and put Tesla here. I'm just going to show you intraday, right from the get-go is very choppy, straight up, straight down. It's trying to climb its way back here. Okay, so it's still didn't recapture this. Bullish, a more bullish day would have been trade straight up, recapture 630, and then kind of hold 630, and then try to move up a little bit this way. That would have been more bullish. The fact that it came lower here, now it's down. We say it every day. You can do it at any time frame, because it's just supply and demand. Down, sideways is what's the next move. So you can always go back to Newton's law. A stock in an asset in motion stays in motion unless somebody pushes it the other way. So stock down. This is kind of going sideways, not up, sideways, and now it's going to go down. You want to see recapturing of lows and highs to start thinking on the upside. I'm concerned about this. I'm more concerned about, as far as this week, looking for any major drops. I'm more concerned. I opened it up here and looking at the, it's trading 609 approximately, looking at the 600 level. Let me just look over here, 550 to 650, to try to give you a sense of where the open interest is. 600, there's a lot of open interest, and especially, do you have a question?
No, just saying. Yep.
Especially today. So you see this right here, 61,000. These are a lot of options for 1 week options. On the call side, you start seeing some stuff here. The more options, the more you have these stop signs where it should sort of clamp down the volatility a little bit. Okay,
right.
Not always, but a higher percentage of the time, call it 65, 75%. The more options you have, it's because people are buying puts, they're buying calls, they're buying puts, buying calls, they're trading back and forth. As the stock goes to Friday, the theta is kicking in, and the gamma. Okay, you're creating your own little gamma well here by buying calls, buying puts, buying calls, buying puts, buying calls. The market is essentially setting up for a big move. They won't get it because they are actually forcing it back. So, for example, let's take a look at this. If you were long a lot of puts and the market went down to 590, 580 towards Friday, you have to sell those puts, which puts pressure back up towards the 600 level. Right. Same thing with calls. If it goes up and you're long calls and you've bought calls and you're hoping for it to go up, well, to get out, you have to push the stock back. So that's this gamma well, this pinning that you start seeing. So that's the 600 level. The June options, again, picking up here. Same thing. You're just starting to see 600 puts, a lot more expensive. So again, you see how the market makes it. They don't like to pay out. They don't want to. The market doesn't want to allow you to buy something for $5 and sell it at 100. It usually doesn't work that way. If you can find that, that's great. But it's usually that's why the $5 attracts a million people. They all buy hoping to get that big score, and then they're the ones that actually keep it there. What the market does want you to do is to say, okay, if you really think it's going to go down, then you got to buy this one for $40, as opposed to, this is a June option, as opposed to the May option that's only probably $20. 19, 20 bucks. Okay.
Right.
So that's the mechanism. And that's why I always talk about this like step. It goes down in steps, and they make it difficult because people come in and they're protecting that position. So that's Tesla for you. You know, it's a quick rundown. I am nervous about this. It's making this pattern here. And so that makes me very nervous. Okay. And I can just move this over here. It's looking something like that. Okay.
Right.
So now we can look at ARK and just see what we were looking at today in some of these names, because I think it's super interesting to understand when I say why today might be a really important day for the next couple of months on some of these names. SPY. No, I'm looking at ARK. Where are you? ARK. Come on. Okay, ARK 3 months. No, we want 3 minutes. So ARK was getting killed yesterday, ended on the lows. So again, just picture selling. They're pressing. Tesla's down in pre-market. They're pressing now. Everything ARK has. Remember I told you the buttons. It's like a basket of stocks. They could just press everything. And they're trying to get the people who own the ARK funds to sell in order for Cathie Wood then has to make a decision on how she wants to manage all the people that want their money back. So they're pressing here. But again, this is a rejection here. This is basically saying, on the open, it traded down $1 quickly and then just shot back up and traded all the way back up to, again, you see the difference between ARK and Tesla today?
Yep.
So ARK reached yesterday's low, came off of it, okay, came back up, had a fight here for, did a little round turn here, and then eventually broke it. This here, holding for a couple of minutes and then moving, this is a really good sign. This is a very, very good sign that there are actually buyers here, and this was rejected. This was rejected by the buyers, the holders, and they said, you know what, we're going to buy it. Now, if you look, this is important because we're going to look at this and we're going to see, I want to show you so you could see what the flow was and what we're seeing in the options market to sort of help you put in pictures and understand exactly what's happening and me explaining it to you as it happened. So when you look at this, I was looking at ARK this morning, and you're always looking for those movements where you get a sharp move and then recaptures to sit the previous day's close that was on the lows. When it recaptures that, that's something to look at, and you got to see that fight there. Now it's moved up a little bit. Now people are saying, all right, this is good. The June options in ARK were active right near the get-go. So the 115, we're just going to call it 115, 120, right at the get-go. Yep. Boom, you see a buyer here. He paid, I have my notes here. He paid, just do it here, 210, yep. 215, 215, and sold these over here, the 20s at 120. 120, so 215. So that's about 95 cents. Okay, so for 95 cents, he's getting a 4-to-1 play. But again, you notice the time he came in to do that. The time he comes in to do that is at 9:45. Where was Tesla at 9:45? 9:45, we were right here. It had just gotten off this low here, traded back up, and it was on a move up here. Okay, so what I'm trying to say to you is that the shorts, because you're going to see this over, or it's going to be repeated, someone knew that either they were going to cover this morning, or on this dip they would have just come in and start covering, because you were starting to see a lot of people reaching for call spreads, and they were actually selling puts, and they were doing that across the board let's look at ARK here. Keep going back to ARK, because ARK is sort of the overall momentum fantasy type of stock name. So they're buying the 115, 120 calls. They then come out and they actually sell this put spread. Okay, they sell this put spread. Which one was it? The
115, 110, I think.
115, 110, right? We're calling it, it's off by 4 cents. But the 115, 410, I'm sorry, 115, 110, they sold that. They wound up selling that. But then what they did here was they bought this. If you look at this, the 95, 85. So let's look at that. The 95, 85. Well, notice the time, 11:35, 11:30. Okay, so 11:30. 355 on a spread, 355, and then they 1130 on the other spread, the other leg. Going to 1130, sorry, and 167. 355, 167 is 180.88. So $1.88. So for $1.88, they're buying this 10,000 times. Okay.
Nice.
They're buying this 10,000 times. Now, what happened? Well, let's look at 1130, right? Because we're looking and I'm trying to show you visually what's actually happened. Okay. Up, you see somebody buying call spreads here. Okay, that just because that may just been because they know they're covering, or they're just saying, you know what, it's time to buy this here. So they're buying here, trades down, and then look at 1130 where it is. You see what I was saying? How it's captures. They're not doing it here. They're not even doing it here. They're doing it at a point where this is now traded $1.50 off the top, and then they have said, you know what? We're gonna get out of this put spread. We're gonna get into this other put spread. We're probably gonna cover our short, and that's it, right? So net, they've been short all the way up here, and now they've completely changed the profile of their position. They probably have covered a lot of their stock. Okay, that's one. They have gotten out of their put spreads, the higher up put spreads, 115, 110 put spreads. And maybe they even bought those 5,000, but I think that might have been someone else that saw the same thing. So what I'm trying to say to you is that the reading the tape and what we're doing and trying to understand how these guys are playing it, I think we can see it now. You can actually see the movement of what's happening and how they're thinking about it, and how if you're playing this fast game, okay, this game of trying to figure out, all right, this is what I want to do, this is what I don't want to do for earnings or for this or whatever, you know, this is the type of tactical analysis. It's not rocket science. I'm using simple logic, and I'm trying to explain it to you in logic so that you know, and you could see it, and you could see it for yourself. Same thing in, you know, you could see the same thing that was ARK, okay? You could see the same thing in DraftKings. Let's take a look at DraftKings.
Okay.
DraftKings, okay, stock is traded lower here. On this move up, okay, there was a call spread buyer. They bought the May 48s, May 52s. Okay, so I'm going to go a little bit because this is more of a what we talked about yesterday. Okay, the magnet is usually this, right? It's usually the 200 day, right? Once it cracks the 200 day, you get 2-3 days down. This is, you know, the market when things are calm, it goes to the averages, you know, and when things get a little crazy, it starts moving all over the place. But the averages are there because it's this mechanism of supply and demand, and supply and demand eventually finds its level. So this 51 should act as a little bit of a magnet. So when they see the market down, and by the way, here's another level that we've talked about that they're looking at, they see the market down quickly from 56 through the 200 day, breaks this level, it looks like it's collapsing. They could take a cheap shot by taking the 48, 52 calls, 58, I'm sorry, 48, 52 call spread. And you could see they did that at this was the DraftKings, the Maze. Looks like they might have even done more here and added to it, but here they did this. Here paid about 96 cents here, and the 52s. It's about 8,000, 9,000 times. Sold these at, let's call it 40 cents, right? 40 cents. So that cost was about, let's just call it about anywhere from 55 to 60 cents. But 55 to 60 cents to make $4. Okay, so if you paid 60 cents, say 60 to make 340, that is 5 times, almost 6 times. Then, you know, 60 cents to make 340 is, sorry, almost 6 times, almost 600%. Yep. But it's, you know, how they're looking to trade this thing over the next couple of weeks and leave it as a placeholder holder, right? So 48.52, and you look, it's not coincidental that they're straddling 48.52 is right near the 200 day moving average. So when I'm telling you how to look for opportunity in situations like this. You could start with technical analysis. You can see how they're playing it. You can look at things, retracements, and you don't have to spend a lot of money to actually look at something like that. We'll take a look at Palantir, right? Palantir earnings last night, and what happened to the stock this morning? I mean, if you woke up early, you saw this stock getting drilled. It was, 16 handle was there. And we talked about it. We talked about how this level, 21, is the level. Still hasn't caught there, but you know what? It did a damn good job today of basically, what do we call this today? Which it's just today, that's a rejection. See the volume right here? It basically said, you know what? I've had enough. Whoever this is selling this, we had enough. We're buying it right here. Whoever that is. And it has to be someone pretty big because it's, we're already at how much stock? We're already at 160 million shares. This is a huge, huge volume day, and it has overtaken what happened yesterday, and it's trying to even overtake what happened the day before. 21 is still going to be your level, okay? But this is a very, very good development. Now, someone say, yeah, that's great. That's why I'm in it. Well, at the end of the day, there's some risk management that everyone needs. And let me tell you, when you're in it at 23 and it's trading 16 at pre-market, the question is, what are you doing? What is your decision right now? You don't know that in 3 hours it's going to hit 20. You don't know that yet, but that's a big decision down here. And so what we're trying to teach people how to think about these important levels and how to manage and say, I don't want to be the person who's selling at 16 in pre-market. And by the way, sometimes you don't even have a choice, because if you're levered a little bit and your portfolio is levered a little bit, then TD Ameritrade, E-Trade, they blow you out. Right. Robinhood, they will blow you out. You don't even have, that's the worst when you actually come in and you're like, all right, I'm going to actually hold this, and you're looking like, where did my Palantir go? And TD Ameritrade sends you an email saying, oh, by the way, that we blew that out this morning at 16 and a half. Why? Because you were getting killed. Your portfolio was down pre-market, and we didn't want to take the risk. And that's it. It's out. Now, you're fuming. You don't want to mess around with that. And those situations do happen. So that is something that I think is important to get from the last week of us looking at this Palantir. Yes, we were talking negative. Well, now, it's Rocky Balboa's time. It's round 3. He's over here hitting Clubber Lang saying, you know what? I'm going to knock you out. This is what's happening here. And if you were watching a fight, you would see the momentum. You would see something has changed here. There are buyers here. So now guess what? 17, or the low right around here, that becomes our level. That becomes a level for whatever reason. They decided today, not going to happen. Not on my watch. It's going to trade higher, and we're going to buy it. And so now the buyer should feel a little bit more comfortable. But if now you're watching break 17 and something has changed. So is this a real buyer, or is this the shorts that have basically said, all right, we're tired of beating you up. We don't want to kill you in one shot. We'll let you hang around, build up your stack here, and then we're going to kind of push you again.
Right.
That's what's happening. That's what you got to be aware of. That's why I'm saying one day doesn't make a trend, although this is a nice day. This is a nice day. You want to see it continue. And what level do we want to catch? 21. We want to get above that. You want to get above that, and then the next level after that will be the 50-day. I suspect that takes more than 3, 4, 5 days, so you have a little bit of time. And yesterday we talked about the 1929 or the 2029. Any one of those call spreads right around there for August, you would have avoided any of that thinking this morning. In fact, you would have slept like a baby and said, you know what, I like Palantir. It's a good stock. Who knows what happens Ernst, and who knows what happens tomorrow, but I'm not getting scared at 9:30, or TD Ameritrade's not selling my stock at 8:45. So you're avoiding disaster. And trust me, it happens. Trust me, you will make those mistakes. Everybody makes those mistakes. You're long it from 30, it goes to 27, it goes to 20, back to 24. You're excited. Then every day for 7 days, it goes down to 18. On the earnings, it's trading 16 and a half. And you're thinking, I hate this stock. I want to get out. I can't take it anymore. You get out. And the next thing you know, you miss it for the next 2 weeks and it's gone. So, again, it's the point of what we're doing is helping everyone read the tape, read unusual options activity, try to find ways to play these events, these pivotal moments, and avoid disaster. Really avoid disaster. How to use options to avoid disaster.
Mm-hmm.
Okay.
Yep.
Okay.
Fair enough.
What else you got?
Talking
Did you see
about
something?
the ones we talked about yesterday, like PLTR. What about NIO? I've seen some put rolling. We mentioned some call buying.
Yeah, NIO, another one. Was looking ugly right in the morning, and look at this stock here. They all kind of look the same. I'm gonna tell you NIO, and then the next one we're gonna look at JMIA. NIO here, still not out of the woods, but you know what? They got after it right at 32, and they said, "No, we're gonna recapture this 34 level." Right? That's been the level. Right? You can do this triangular if you wanted, and maybe it sort of hits this level 35. Either way, somewhere around this vicinity. Okay, the buyer who is here, 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 and now he's back again here. Okay, he wants to hold 34 for whatever reason. I have no idea. Could be computers, just could be psychology. It's also 37 is the 200 day. The one thing is you have XPEV this week. XPEV this week. That should shed some light. Not out of the woods. I don't necessarily want to get long right here. I like that they have pushed it higher, but let's see what happens. And you want to get one day, again, does not make a trend. You want to see action. You want to see that buyer. You want to maybe see him trade it to 36. Maybe they try to bring it down to 34 and he pops up again and they take it. I'd rather buy it up here when it's starting to make, higher highs and it's starting to look good and the news flow is starting to be better and things are looking on the up and up. Yeah, you miss some, but if we're thinking 66 to 100 over the course of the next year, or 18 to 20, you want to protect against that. I don't mind buying call spreads here as a placeholder, right? When you see calls or the 2 week, 3 week, 1 month calls, a lot of times that's hedge funds doing the same thing that we just did. They're looking and they're saying, we don't know if it's going to break, but you know what? Maybe I can catch 6 points. What do the calls look like just in case? And it's a placeholder. If it goes to 42, I make a little bit of money, and then I'm going to decide how much I want to get into it because by that time we've cleared the hurdles. So I'm looking at NIO. This one looked like, was it June? June 35 calls. Notice the time. 9:30, right at the get-go, right? What that means is that they knew from last night, if this happens, this is our level we're coming. Nobody starts looking at it at 9:30 and going, oh, the market open, it's down. Okay, let's buy. These guys, they know what they're doing, which means they had buys. The people who are buying this, they already had those buy tickets on the desk, just waiting. They're probably buying some in pre-market, but waiting for the liquidity to get there and just coming in, getting leverage with the calls, and then they bought them really almost for the rest of the day. There was some call activity, but this is this is not a bad development. It's actually a good development for NIO, and they're protecting that 34 level. That's the level you want to watch, and you want to see it with volume be below that level. Above that level, you got to be thinking long. But it's because it's such a pivotal level, and XPEV is coming this week. Again, I think options are a better way to play this than if XPEV is good and China EVs are good, then you'll have no money. You'll have no problem making money with these. At what was he paying here? $2, $2 and change. These things, these things are going to explode to. The stock's going to explode to 40, 42 if XPEV is good and everything starts turning back towards EVs. So that's how you have to think. If you're trying to trade these names on the side, that's how you have to think about these things. Placeholders and June, I would say now July, August, September, and further out. That's where you're looking for the bigger trend. You're sure it's like NIO is making higher highs. It's starting to move. Give me those a little bit longer because I want to catch that bigger trend. That's how you start thinking about it. The near term is, they're trying to make some money, but it's almost like they're trying they're trying to avoid disaster as well. It's a combination of we can make a little money, but I don't want to be long the stock right here because we can wake up the stock's 28 on Friday.
Right.
Okay, so keep that in mind. So that's NIO.
What about there was also a May 28th in NIO put roll down. So maybe they took some profits and now
perfect.
They bought some.
Think about the logic, right? The logic is the 32 here, 32.30. So at 950, stock has now made a big move higher. They've seen the stock go from 32.60, trades 35. It's on its way to 35, and they come in to do this. So they're going to sell this put spread down, which they bought the other day, right? They bought these puts the other day. So now they're selling these at 116, and then they're just buying these here, which is less money. So sitting in the, I can tell you how it actually works. It's, the hedge fund managers here, me being the trader, I'm 4 feet away from them doing my thing. He's doing his thing, and he sees it. What do you think? What do you think? I said, they're buying everything. You could see the tape. They're buying everything. And he says, you know what? He starts rifling things. Just get out of the NIO, get out of those puts, roll them down, like take money off the table and do it now, because he's seeing what I'm seeing. We're all seeing that there's a bid, and they're coming after these things. And, he might even say, buy some calls, get out of the short, that's how, and it's fast and it's moving fast. And you're thinking about these things at a very quick speed. And you're seeing it. This is the only reason someone is going from 32 to 30 is for 40 cents or a few pennies, is simply, I want to take money off the table because the stock is very, very strong here. It's recaptured yesterday's low, and we want to get out of it. We still want, because there's still a possibility that this thing blows up, trades down, goes through. So I still want something, but right now I want to just the minimal amount of money I want. And if you buy some calls, anything to just minimize the stock going right now to 50. We don't want to do that. Okay. So again, mindset and logic. This is exactly what happens when, literally you're sitting at a hedge fund and the main guys, they're there watching their book. They have 100 names and rifling towards the traders, saying, get out of this, get out of that, switch this, take it out of this way. I want this. Now you have meetings before and you sort of understand if this, so you're prepared, but you know what to do when they say, get out. It's not like, well, I think this, it's, we're getting out. And now it's your job to sort of do it in a quick way without trying to move the market too much. In this case, the market's already moving, but you're not trying to throw away money. You're trying to make sure we're doing the right thing, getting into the right situations and moving on. And it's a checklist of names that they're doing it. So, so again, you're seeing the same logic. It's risk reduction from people who might've been short here. Okay.
Right.
And that's again, it's important. It's telling you this is a big day where it's different than what we've seen in a long time. Let's look at one other one this morning, because that one traded. You could just look how this one was trading for the last month. JMIA. I saw this trade 16. It was 16, I believe, today. It opened up and shot. It was 16 this morning. Now it's trading 24.51. You're talking about, this is a huge reversal, which means that people were probably puking it pre-market, and a lot of people have gotten out. And I mean, this is no difference than like a 1980s as a kid, New York City mugging. You just feel you get mugged. I mean, this is somebody just took somebody's, wallet. This is a disaster. This is what you don't want to happen. Exactly this. Trade 16 pre-market, 17, somewhere around there, and literally shoots up from the open straight up after, it had to take some people out. Just looking at that, that people were burned down there. And you're trying to avoid that. Look at the amount of a million in the first minute, trading at 18 to 19. So they took out a lot of people, and now we're trading 24.5 above here, and it's looking to trade 28, 27 tomorrow. It's what it feels like, right? So again, how do you avoid this? How do you avoid getting taken out on a trade like this? This isn't a small move. 23.5 down to 18 is $5.50 on a $23 stock. You're talking about, 16% on this thing, 17%, 5. How much is that? 5.5? No. So that would be 25%, 25% in the morning. If it was 16, 17, 30%, that's why I'm saying, I think TD Ameritrade, E-Trade probably just said, hey, Citadel, I'm about to dump to you 1 million shares, go print them, here. It's like market order. They don't care. Market order. So you literally walk in and you have no more JMIA because, because maybe you're a little bit leveraged, and TD Ameritrade just decided you're the guy today and they're going to take you out. So, how do you avoid this? Again, it's look, you like JMIA. It's a mouthful. stock has been under pressure for, a month and a half here, straight down from 52, couple of bump here, but at some level breaks at 200. You got to say, I like the stock, but ahead of earnings, what does the 25-35 call spread look like? Again, you're using call spreads here. Why? Here's another thing, because we talk about the big guys only buy calls and they only buy puts. When they're buying these placeholders, like I'm saying, where they're basically, buying into a downtrend, they will buy these 25-35 call spreads, right? Just for a number, because they're just basically saying, hold it for me here. If it goes up, I just want to make some money to make this, and then I'll make a decision. And if it goes down, I'll lose the $2 or whatever, but I'm not going to get killed for $10 on the way down. This, again, same thinking. It always goes back to the same thinking. But here, the important thing is that when it's a downtrend, and they're looking at the upside, call spreads are probably more you'll start seeing more call spreads. When it's on the upside and it's going this way, over here you'll just start seeing mainly calls, because the upside is unlimited. But because there's now volumes and volumes of people trapped up here that are just waiting to sell if it gets higher, they understand that. So there's no more, that value in that call is diminished in their eye.
Yeah, I see.
Okay.
Cool.
Good. What else?
Since we're running out of time, let's rifle through a few. And we had a question yesterday about Airbnb earnings that are on Thursday, and there's any potential trade that people could take a look at.
Airbnb. Yeah.
Mm-hmm.
Let's go here. Airbnb. I know the highest level about Airbnb. It's a pretty cool company. That's what I know.
Yeah.
I haven't looked at it tremendously, to be honest, but I'll just do it, just from eyeballing it here. Obviously a reopening name, if everything is reopening and things are good. My eye is caught to this level for whatever reason. Okay. Yep. That was day one, the high. So you have 1, 2, 3, 4 over here. They came in to buy it. Over here, they came in to buy it. They came in to buy it again. And then something happened here, right? So I would be looking, it's a dangerous situation. You're now down to this level over here. It traded as low as this level over here. So, you can't discount that it can't get through this level. But if you were long it and you're down 45 points going into the number, then let's take a look. Airbnb, we're talking about JMIA again. It's like the day before earnings, and when is this earnings? This week, 13th. So it was Thursday. Mm-hmm. So how would you look at this? How would you play this? So Airbnb, ABNB. Okay, so let me see. I can do for earnings. The first thing I generally try to look at is what is the 145, let's call it 160. How about this? The first thing I really do is I've already done it, but to do individual pieces. You see this stock is right here, 140, 171, right around here. Okay. Mm-hmm. You can look at this on this side, and you can look at this on this side to kind of give you sort of the range that the market is thinking for earnings. Okay. So you can look at it and say the 140s, it wants say around 128, 131, and then the 140, 145 says 150. All right. So the market is basically saying around 130 to 155, somewhere around there. That's what we think. We're sort of pricing the board like that. Okay.
Nice. Okay.
Outside of that, so right in front of earnings, you could just kind of look at this and say, this is where the market's sort of pricing things. Okay. Outside of that, you can look at each individual. This is where this is the number I've created. It's sort of the risk reward break even price. So you can look at and say, if I'm going to buy the 150 calls, then I got to be thinking somewhere above this, because given $3.48 and where the stock is right now with this strike, 162 is sort of the level I need. I need to make a good amount. I need a big jump. But remember, we are talking about Airbnb. We are talking about the stock being down. We have all these people here between 165 from right here, 165 to 220 holding the stock. They're long. Okay. But now the stock is broken, and you can imagine all these people are nervous. Okay. The stock is trading 142. I would lean against this line. See this line that I'm looking at? So my inclination is, what is the 165 calls cost? And because I might want to sell them, right? So I find that line, and I'm now looking at which is the trade that might fit. it might give me a good risk reward return. So I'm looking at 145, and I'm looking for greater than 200%. Okay, I need to make if I'm going to do a call spread and head of earnings, I need to make more than 2-to-1. Okay, and really I'm looking for 2.5-to-1 or better. So the 145, 160, 15 points is going to cost me, let's call it 520, and 145, 165, 520, and 140, which is going to be around 380. So around $3.80 for a $3.80. Let me just write this down. $3.80 for a $15 wide spread. And the reason I didn't do 165, just to give you an idea, is because I see that it's not offering me that much. The 165s are offering me just $1. I'm trying to get a little bit more money because this one is worth 5 and change. So I just want to see the numbers. 145, 160, that's going to be about 380. So 380 to make 1120. It can only be worth 15. It can only be worth 15. I'm paying 380, so 1120. So 380 to make 1120 is about 270%. So gain, so 2.7-to-1. That's sort of the one I'd be looking at.
Yep.
If I do 145, 165, I got to pay more. So that's $4. 4 to make 20. That's 400%. But I got that extra $4 I don't like because I'm trying to lower this as much as I can. This is 420 to make 1580. So I'm trying to lower this as much as I can because I also got to be cognizant my break even is going to be 150. So I need a good move up. But that's what you're looking for if you're long the stock and you're concerned that it trades down. I think the concern is it trades down below 120. You have a weak market at the end of today, and like if this market now turns, and which it easily can now turns, it starts trading near the lows, and you're gonna see you could see tomorrow open it up and really bad again. So you want to be cognizant of that. Right now they're killing people. They're killing the put buyers today because they bought puts and now the market's trading back up, and then they're gonna the put sellers, the day traders get out, and then overnight you might see it come down again, the steps. But here I would look for the 145, 160. Again, I'm leaning on the 165 that they will probably be sellers here somewhere between 160, 170, and I'm looking at 250% as a placeholder. Trades 120, I'd probably buy the stock, or below 120, I want to be long the stock. Obviously, you got to look at the fundamentals to see if that's the level you want to be long, but that's what I would be thinking.
Cool. Nice.
Okay.
Nice. I like it.
Good. Anything else? I'll give you one more before we leave. How about Facebook? One trade that I saw that I didn't say. One trade is Facebook. Facebook, this was a nice catch where Facebook went from here to here. They've taken these things down from 330 to 300. And I personally was looking and asking myself this morning, where are the buyers? Like, there's supposed to be buyers here in Facebook, and where are they? And it looks like they came in a little bit. They came in and they rolled down their calls, right? Because they had some calls here in, let's see my notes here. They had some call spreads here in June. So the June, was it June? June 330s? July 330s. Let me see this. Or was it the May's?
July.
There we go. July. Sorry. July 330. So the July 330s, I have them here doing this 1x2. The 305, 330, 1x2. So they basically see 13,000. So they sold these. Okay. They sold these. 7,250, about 9,000. You see spreads. They sold those, and they bought the 305. So they rolled down at about let's call it 1560, 1575. So 1560, 1575, selling it at around 585. So you're talking about twice. 585 twice is 1170, right? You have to take $5.85 twice because they sold 2 of these versus 1. So that's 1170 and paying around 5.5, call it. So $3, $4 and $3.80. So let's say about $3.80 they laid out more, but they have less contracts, right? So this is an adjustment trade. They have less contracts, but they're a lot closer to where the strike is for July. Okay. So
Yep.
this is a positive development for Facebook. You want to see those buyers. It looks like they've come in several months. I'd have to take a look again, but that's something that's a good development. Again, so look, you're seeing some positives. I think it's interesting to see. Take a look at. Let's run through a couple else I saw that I'll show you for you guys to look at. Expedia. They were buying the ARK 185s and the August 175 calls. We saw Melvin Capital. You can go look at holdings.com. And you'll see Melvin Capital is very big in that name. Guy to watch. There's some Gap stores, UOA that's out there. And we saw some Electronic Arts ahead of the earnings. Call spreads being bought. I like Electronic Arts. I like ATVI. I think the market, I think these guys have EA, Electronic Arts, probably goes the way of ATVI and has more of a freemium model. They see how it works. They see how much money ATVI is making. I'm sure in the backdrop they're going to come out with something that similar. But I think that works, and the chart looks great. And ABBV, a name that caught a little bit of bad luck. Stock dropped on, crappy news that they were moving the FDA meeting. We talked about it here to move to July, and the stock has done fairly well. We are seeing a seller, but up at the 130 level. But you should go take a look at that to kind of to see where it sort of goes with the same story. We're seeing sellers at 125, 130, buyers anywhere from 305 to 315 in ABBV. Okay.
Cool. Okay. Great.
Awesome, man. Awesome.
Thank you, Felix. That was great. Thanks, everybody. That was a really good discussion in the comment section about EVs. We'll definitely go over that and read it.
Good.
They're interesting. And
yeah, maybe they're making a come. Maybe this is a don't call it a comeback, right?
Right.
We'll go out playing. I won't wrap it, but there you go.
Exactly. Okay.
All right. Be
cool.
good.
Thanks,
Bye.
Felix. Thanks, everybody. See you tomorrow.